Oh, it's nice to see you. The market's done extremely well going into the weekend.
Yes.
And then maybe for those who were looking for an opportunity to buy the dip or a dip, here's a dip for you today.
Yes.
Would you? What advice would you give to those people?
Yeah, well, I think we will be buyer of this dip, right? So we've been waiting for this. I think, before this correction, the Chinese stocks has been going from strength to strength, especially the tech stocks. So I think, for people who, wanted to get into this trade, it's very difficult, all right? Or not very, but, it's trying to find a good position to get in, right? So now this is the chance, and I think, the volatility will be with us for some time, but then, this gives a period of building a window for building positions.
It's interesting, though, but I think we didn't expect this in some ways. I don't know if you did, Powell, but what do you think is the reason, the motivation that China, in light of this move of imposing export curbs on rare earths, right? Because we're still, a few weeks away from APEC.
That's right. Yeah, I think judging from the market's response, I think, most people were surprised by this move. I think China is retaliating, because before this, the U.S. is using the BIS affiliated route, basically blocking all the channels that China can get its hands on advanced semiconductor chips. So I think after that, if you see a series of Chinese retaliation, right? So China is telling the leading tech firms not to buy NVIDIA chips. It's also showing confidence is Chinese-made chips, and also China is imposing fees on U.S. chips as well, for using Chinese ports. So leading up to this, right? So basically, we're becoming more restrictive on rare earths exports. Right? So I think people are seeing it as a sort of a retaliation to the previous U.S. move, but then over the weekend, Donald Trump basically retaliated by imposing 100% tariff on Chinese goods. So therefore, the market is rightly concerned. But I think judging from the history so far this year, more likely than not, we're going to get a tackle trade. Right? So Donald Trump is going to back off at this stage. For two of the leading countries in the world, no one can gain anything from hitting at each other.
Do you expect the posturing, though, to continue the next 2 weeks ahead of the meeting? And do you expect the meeting to still take place?
Yes. Well, I think both sides are still expecting the meeting to take place in a couple of weeks. And also, going into this meeting, China has to posture, right? So as still have cards on the table to play, and also telling the opposite side, where the bottom line is for this negotiation. So in so doing, it actually helped for the meeting to become more successful, right? So if during the meeting, China try to change check and trying to retaliate after the meeting starts, then I think it will be a even worse starting point for the meeting.
Okay, so if this is the window opportunity to buy, what is worth scooping up right now, right? Because up until now it's been growth, right?
Yes.
Is it time to sustain growth, or is it time to actually rotate?
Yeah, I think people has done tremendously well with the growth stocks, right? So if you look at the Star 50 index in China, it's up like 180% in the past 12 months, right? So it's the leading performing index in the world. I think by now people has done so well, and also because the relative performance has been so extreme, then it actually pays to rotate some of the money back to the value stocks. So in the past couple of months, as growth stocks start to rally, Chinese banks, insurance, brokers hasn't been catching up as much. But these are the names that is very steady. It's heavy index weight, and so as money rotate back to these stocks, then we expect that these stocks will lift the Chinese index higher from here.
I'm looking at some of the valuations. I'm just going to mention SMIC as an example. Trading at 160 times earnings. I think your reaction says everything. But so what do you think expectations are? Do you think expectations are slightly too high as far as AI is concerned in China? Or how do I play that?
Well, I think everybody is going for AI, right? So it's going to change the way we work. I think specific for SMIC, we have a position in the stock. Okay. to declare.
Yep.
But then,
thank you for that.
Then at the same time, we're expecting earnings to double from here, right? So rapid earnings growth from here.
Yeah.
So as a result, even though now the PE is like very, very high, right? So but for growth stocks, 100, 200 times PE is actually showing the growth potential that people are willing to pay for, right? So at this price, so one shouldn't be too surprised to see the stock continue to do well, and also earnings starting to catch up. Therefore, then you will see PE ratio actually comes down because earnings is going faster than the price.
Okay. What should I look for in terms of ways to measure trade war tensions, the proxies that you've been looking at everything from soybeans to semiconductors.
Yes.
What's the right sort of one to look at?
I think a number of indicators we can keep track on. One is the soybean you mentioned, semiconductor performance, and also the Chinese yuan, right? So this morning, we see Chinese yuan is actually have a stronger reference rate, so meaning China is actually not retaliating after the U.S. imposing 100% tariff, and also the U.S. long bond yields, right? So and the Chinese long bond yield as well. So many of these indicators is going to tell you what the market thinks. But then I think the most direct way to measure is the poly market, right? So the prediction market. So they have a bet, whether China can resolve these conflicts around the APEC summit. I think right now the chance is like 90%-ish, right? So there's the market is actually quite optimistic of the outlook.
What do you think the risk premium should be after this meeting? Because this, to me, is a reminder that markets forgot about this issue.
Yes.
Right? We forgot about it, and then the weekend I woke up Saturday morning.
Yes.
Yeah, that it could still flare up. So what do you think the appropriate risk premium should be after this meeting, assuming poly market is correct?
Yeah, well, I think, there would be like back and forth, between now and leading up to the summit. And also I think, for the Chinese yuan, the Chinese central bank is sending a signal that China doesn't want a war, but, if there's a war, China is ready for it. And also, for the risk preference sake, for the Hang Seng, for example, right? So Hang Seng is about, 26,000-ish, right? So it's actually at a higher level than the beginning of this year. And you can see the lower point of the Hang Seng index is actually rising. Right? So one should be, we're very comfortable with Hang Seng being at about, 25,000 as a buying opportunity.
Okay, just in 10 seconds or so, do you think the national team might come in to stabilize in case the onshore market starts to fall even further?
Yeah, I think, judging from this morning's performance, I think, the national team is at rest, is quite relaxed at the situation.
All right.
And I think many people are looking for buying opportunities.
Hong, thank you so much. Managing Partner, CIO at Lotus Asset Management. Coming up here on the China Show, Eurasia Group's China Practice Head will be joining us in a couple of minutes.